Hello and welcome to the Bankers Masterclass series on the next generation of correspondent banking in association with Deutsche Bank and SWIFT. I'm James King, the Bankers Europe editor, and I'm joined by Marc Recker, Global Head of Product, Institutional Cash Management at Deutsche Bank, and Saskia Devolder, Managing Director, Head of Western and Central Europe at SWIFT. In the final chapter of this three-part series, we will discuss the ways in which the market trends, including a changing competitive landscape, new technology and shifting regulations, are shaping the future of the correspondent banking business. Marc, let me turn to you first. When we consider correspondent banking today, do you think that there's a perception that the correspondent banking model is too slow? And does that perception match up with the reality?
I think there is a complete misconception in the market. And correspondent banking historically has potentially not been the fastest, but what we have done over the last couple of years, it is actually something really groundbreaking. And with the introduction of SWIFT GPI, we have also the MIS available to prove it. When you look, for example, we in Deutsche Bank, one of our fastest transactions that we have been processing from a financial institution in France through Deutsche Bank in Frankfurt, and then going back at the end to Hong Kong, that is actually the piece what we have been able to do end-to-end in 18 seconds. And that is really something I could consider fast, given the complexity. We are not talking about a domestic payment. We are talking about a complex cross-border transaction. And when you look holistically, it is about, call it 50% of the transactions that we process are below the 5 minutes. And even with the introduction of the new standard like ISO 20022, this SDP rate will go much more up because we can make use of much more structured data. So I would say it is not being potentially instantaneous, but we cannot definitely say that correspondent banking is slow.
And Marc, just to follow up there, how can banks that are on the SWIFT network capitalize on some of these key trends we're seeing in the market today, from changing regulation to new technology? How can they capitalize on those trends moving forward?
Capitalizing is definitely something that you need to differentiate. I think from a technological perspective, we have alluded to that one in the previous chapter. For example, transaction management platform. The technology needs to be state of the art to allow for much more efficiency. But also when it comes down to the compliance piece, right? Having the respective, let's say, structured data for the industry, it will make us a safer way on how to pay. And that is also increasing to a certain extent the trust that our clients are giving to us. But also from a business development side, when you look in the B2b space, there are statistics out there that the B2b payments market is growing. That is something where we have been embracing with SWIFT GPI to deliver added value to our clients without disrupting their experience. We have delivered tracking and tracing capabilities to allow clients to see where their transactions are. But what we are also observing is the piece that retail payments are also on the rise. And we are working together with SWIFT at the end in a project where we'll tackle also the needs for the retail payment sector. Because what we want to achieve as an industry together with SWIFT is to become at the end a one-stop shop for all cross-border payment needs, account to account, and the clients can go to their bank where they have the trust in to allow a seamless cross-border payments experience in the future.
And Saskia, let me just turn to you and ask you, Marc has touched on the success of the GPI initiative here. And let me ask you, what comes next for SWIFT after GPI?
Well, I think we will stay with GPI, but we have variations. The first one is we see global customer demand to be able to pay and be paid in real time, becoming really the new norm. Customer expectations and behaviors are changing. And according to the FIS 2020 report, Flavors for Fast, 56 countries are live on instant payments. And adoption and usage of instant payments have even accelerated, especially during this COVID-19 pandemic. Speed has become a given for domestic payments, as most of these systems are functioning mainly on a domestic level. We want to use GPI Instant to connect these different instant payment systems with each other on a global level. GPI is crucial to have the currency conversion, and as Marc mentioned, the required regulatory compliance checks executed. In addition to our plans for GPI Instant, we're also developing a cross-border payment solutions for SME and consumer low-value payments. Marc referred to it earlier. It's based on GPI, and we will allow the banks to offer easy, fast, predictable, and low-cost cross-border payments for those expanding customer segments.
And Saskia, how will GPI Instant and the low-value payments offering function for market participants, and what are the key benefits?
Well, James, for GPI Instant, we want to create links between the domestic and the regional systems to streamline account-to-account payments. In December last year, SWIFT GPI Instant gained its first live link in the UK with customers from Lloyds Banking Group, now being able to remit instant cross-border payments through Lloyds via the UK faster payment system. Also in India, we have now access via GPI Instant to the local instant payment system. We did the same test in Europe with the TIP system of the ECB, and also Deutsche Bank participated into that one. So more is definitely going to come over the next couple of months. And as I mentioned, in addition to GPI Instant, we're also working on that low value payment solution, which is a variation on GPI. It's focusing on consumer space and small businesses. This solution allows banks to offer their SMEs and retail customers easy and fast cross-border payments at a competitive price with full front-up transparency on fees, FX, and timing. This solution is being developed with 27 large banks from around the world, including Deutsche Bank, as Marc mentioned. Today, we're in a pilot phase and we will go live later this year. But both these initiatives are key milestones on our journey altogether towards instant and frictionless cross-border transactions from account to account anywhere in the world.
Thank you very much for your time today.
Thank you.
Thank you.